just in case.
Excuse me, Professor.
Sorry? Yep.
One more thing regarding the attendance discussion.
Yep.
You posted that in the week 4, right?
Sorry?
You posted that question in the week 4, right?
Yes, that's correct. At the very end of the week 4.
But I can't see that thing in my right space content
Yes,
in the
Professor.
week.
Even I am facing the same problem. Even I can't see that.
You cannot
Today's
see it?
attendance.
Okay. So
No,
let me do something else then. I know you have problems seeing this. I don't know why is that. How about now? Can you try now? I know I always have problem with this. Okay, let's start now with this chapter 8 and go over the chapter 8. So again, in this chapter, we're going to talk about the classification of the cost and how we're going to trace costs for different purposes. First one is to find the object. So the object to which we're tracing the cost will be anything that we accumulating the cost. For example, if you're trying to find the cost of the electricity, everything that drive the cost for electricity will be the cost object will be electricity, and everything that drive the electricity cost will be in that pool. That's how we should think about when it comes to the cost object. Now, the first cost object that we're going to talk today is the product. We're going to divide the cost based on the product cost and the period cost. Product cost will be everything that is related to our product that we generating in our process of business. Period cost, we're going to talk a little bit later about that. So we have this product cost where the object is the product. So because the product drives the cost, we're going to try to find which costs are related to that product. Period cost is those the expenses which happen during the period because we're running the business. That will be anything like administrative expenses, selling expenses, marketing expenses. Now, the concept of the managerial accounting is to find the cost. Which cost? We're going to try to find the manufacturing cost. Why? Because we're trying to find out how much cost for us to produce our products. Because once we have the cost of the product, we can sell the product and make sure that we at least cover the cost. What will be the typical manufacturing cost or typical product cost? There will be 3 categories. First will be direct material, second will be direct labor, and the third one will be manufacturing overhead. Direct material is any raw material which can be easily traced and associated with the finished product. That's what we're going to call direct material. Different examples would be flour if you're baking bread, syrup of the bottling soft drink, and steel if we're using and making an automobile. Once we have the direct material, then we can hire somebody to start working on the material in order to produce the product. So what will be that direct labor? Direct labor will be anything which can be easily traced to the product. And why do we need again the labor? To convert that raw material into the finished goods. Those are the examples of the different labors which are direct labors for the product that this company produces. The last thing that we have to trace is the manufacturing cost. Always remember, we have 3 costs for the product: direct material, direct labor, manufacturing overhead. Direct material always comes first, then comes direct labor, and the last one is the manufacturing overhead. Manufacturing overhead is any indirect material or indirect labor. Those are the costs of the finished good that cannot be easily traced to the specific unit. Now, the indirect material is the material that cannot be easily traced. So any small part of the material which happen in our production, like a lubricant, cleaning supplies, as polishing compounds, we don't have to trace them directly, or it's very hard to trace them directly. We just accumulating the cost in the manufacturing overhead, and after that we're gonna allocate it to the product. Same thing with the indirect labor. Indirect labor will be anything with the wages of the maintenance workers, cleaning people, security guard, supervisor, that cannot be easily traced to the product, but is related to our production. So, because direct material and direct labor comes first, we're gonna call it prime cost. Again, remember, direct material is first, direct labor is the second. Those we're gonna call it prime. Prime means first. Second classification will be once we get the direct labor and manufacturing overhead, we're gonna call those two costs conversion cost. Because direct labor and manufacturing overhead converting the raw material into the finished product. Again, material, labor, prime cost, labor, manufacturing overhead, conversion cost. As you can see, direct labor is involved in both classification for the prime cost and conversion cost. So conversion cost plus direct material will be total product cost, and prime cost plus manufacturing overhead is going to be total product cost again. That brings us to the first question. Which of the following is not element of the manufacturing overhead? So anything which is not related to the product in this case will be directly not manufacturing overhead. Which will be the salary that is not related to our product.
Sales manager salary.
Sales managers, yes, that's not in the production. He is part of the period cost. So the following labor costs have been incurred in this company. Of this amount, how much will be considered the product cost? Again, the product cost will be direct material, direct labor, and manufacturing overhead. So which one will be the product cost? Which one will be not product cost? What do you think? Is direct labor product cost?
Yes.
No questions about it. How about indirect labor? Is it the product cost?
No. Yes.
Yes, it's a manufacturing overhead, correct?
Yes.
Supervisor salary for the plant. Now, indirect labor plant, that's a manufacturing overhead. Supervisor salary for the plant. Is that a
Yes.
product cost? Product cost. How
Yes.
about the sales commission? Is that product cost?
No.
No, we already say sales, anything related to sales, that's not part of the product. That's period cost. So salaries, sales salaries?
No.
No. So what's left? Those three.
Yes.
Once we get those three, we're gonna get the total cost. Seems like it's gonna be 480, right?
480.
480, as we can see it. Okay, so let's go with the product versus period cost. Again, product cost consists direct material, direct labor, and manufacturing overhead, which are integral part of the product. Those gonna be recorded as an inventory, and also besides the product cost, you can see it as an inventoriable cost. Why? Because it's inventory which is gonna stay in the balance sheet. The other cost, which is the period cost, they happen only and only in the business when the finished goods are sold. So on the product cost will become expense once we put it in the inventory. Product cost will become expense only and only when we sell it. Once we sell it, it becomes a cost of goods sold. So once we sell our inventory from the balance sheet, it's going to move to the income statement as a cost of goods sold. The period cost, those have to match the revenue. Those are, remember, the period costs are everything which is not related to manufacturing cost. So the sales salary, the accounting salary, anything related to the sales and administrative expenses will be non-manufacturing cost. Those will be deducted directly from the revenue. That's why we call it the period cost, because it goes directly into the period statement, which is the income statement. So again, from all the costs that we have in the company, we're going to split it by two: product cost and period cost. Product cost is going to go to the inventory. It's going to be related to our cost of our finished goods. It's going to be direct material, direct labor, manufacturing overhead. It's going to stay in our inventory as long as we have the product. Once we sell the product, it's going to move to the income statement that's of cost of goods sold. The period cost is all the non-manufacturing cost or non-inventorable cost. It's not going to go to the balance sheet. It's going to go directly to the income statement. Example will be the selling expenses and administrative expenses here. Let's see this question. The following costs have been happened in this company. Of this amount, how much will be considered period cost? So which one is non-product cost?
Sales commission.
20 B.
Right? So
20.
yeah, sales commission is not product cost, and administrative salary is not product cost. That's $20. Good. Now, how the costs behave is a different classification. Okay, so now first we split the cost, the total cost of the company, by only two categories: product cost versus period cost. Now we're gonna grab those costs again, and we're gonna split them by how the costs behave. Or what that means, how the costs behave, how the costs respond in the changes of level of business activity. If we increase the level of activity, what's happening in the cost? Is it remain the same or is it increase? We need that classification to help the manager to plan the operation, to make decisions. Now, the activity level can be expressed in terms of the sales dollars, kilometers driven, rooms of capacity, dense classes, anything like that. So again, remember, here we're chasing what's our activity in the business, what drives the business, and we're going to chase the cost, how they react in increase in our activity. If we increase the sales of the dollars, is the cost increases or stays the same? If you're driving more kilometers, is the cost increasing or stays the same? If we have more room occupied in our hotel, what's happened with the cost? It's going up or stays the same? So only the changes of activity or the volume of activity should be correlated with the changes of cost. For that reason, we're going to split the cost into the variable cost, fixed cost, and mixed cost. So based on the activity, if the activity drives the cost, that means the cost is variable. If the activity doesn't change the cost and cost stays the same, we're going to fixed cost. Mixed cost is combination of the variable and fixed cost. Let's see first what's the variable cost. Variable cost is directly and proportionate to the changes of level of activity. What that means is, More we using the activity, cost increases as a total. Now, as per unit, cost stays the same. Perfect example of the variable cost will be cost of the gas. Per liter stays the same. The only thing that drives the cost when you go to the gas pump, when you check the price, regardless how many liters you're gonna fill up, the gas gonna stay the same. Now, the only thing that's gonna drive the cost is how many liters you're gonna put in your tank, or how many kilometers you're gonna drive your car. If you don't drive your car, the cost will be zero. If the price is $2 and if you drive 10 kilometers, and or let's say you put 10 liters, that will be $20. And more you're filling up, more you have to pay. Example of the variable cost again will be direct material and direct labor. Why? Because they're directly related to the volume of the products that we're selling. Sales commission for the merchandising, because more you're selling, more you have to pay commission. And gasoline for the airlines. Now, example with the variable cost will be manufacturing tablet that contains a $10 camera. Now, activity index in this number of tablets is produced. So basically, with producing the tablet, which has a camera, and the camera is $10. So more tablets we produce, more cameras we have to install, more the cost of for the camera is going to go up. But cost for the single camera always going to stay $10 or the same. So if you produce 2,000 tablets, cost for the camera will be $20,000. If you produce 10,000 tablets, cost will be $100,000. But for the camera, we always pay $10 only. So the variable cost per unit again stays the same, $10, but total variable cost goes up. More we're using it, more we have to pay. More units we're producing, more costs we have to pay. Fixed cost, on the other hand, behave different way. Now, the total fixed cost never changes within the relevant range. But cost per unit, it's a different story. Let's see example of the fixed cost. Example of the fixed cost will be your rent. The rent that you're paying related to the people that live in the household, it's a fixed cost. Let's say you're paying for the rent $1,000. For one bedroom apartment, if one person living in that one bedroom apartment, cost per person is $1,000. If two people living in that bedroom apartment, the rent for the apartment is still going to stay as $1,000, but cost per person now goes down to $500. If four people living in that apartment, cost for the apartment is still going to be $1,000. Total cost for the fixed cost is going to be $1,000, but cost per person now is going to go down to $250. So you can see the rent is a fixed cost to the number of people living in the apartment, but per person based on the number of people. More people living in the apartment, less cost per person goes. So that means that if the volume increases, cost per unit declining. Example will be the property taxes, rent, insurance. So example will be this company leases a productive facility for $10,000 per month. So the company leases that space for $10,000 per month. Now the total fixed cost related to the level of activity always going to stay $10,000 per month. But now if we produce 2,000 tablets only, cost per tablet will be $5. Why? Because we're paying 10,000 per month and we're producing 2,000 tablets. But if you increase the production to 10,000 tablets per month, since we're paying $10,000 rent per month or lease, the cost per tablet will be dramatically lower. So the only way to reduce the cost is per unit is to increase our production. The other example, so we can picture it, is imagine there's you skiing and you're going to the to ski in, let's say, in Seymour Mountain in the evening. So you're going there, you're paying pass for the evening pass. Let's say you're paying $60. If you make only one run, that run's gonna cost you $60. But if you make two runs, now each run is gonna be only $30. If you go with 10 runs, then the cost per run is $6. So what's your incentive? To use that fixed cost as much as you can. That's the only way you can reduce the cost. The other example for the fixed cost will be your monthly pass for the TransLink. More you using that pass, less cost per trip's gonna go. And that's how you're utilizing your fixed cost. On the graph, again, the graph for the total fixed cost always gonna be flat line. Why? Because the monthly pass based on the zone always gonna stay the same. You don't have to pay for that pass every single time when you go to the SkyTrain. You're only paying once a month, and that's it. After that, depends on how many times you're gonna use that SkyTrain. More you're using it, less cost per usage is gonna go down. How are we gonna distinguish between the variable and fixed costs? Again, variable costs are costs that always changes with the level of activity. More we're using it, more we have to pay. If we don't use it, we don't have to pay. If you're buying the single ticket for the SkyTrain, if you don't buy a ticket, you don't have to pay. If you buy more tickets, more you have to pay. But the fixed cost always stays the same in total, but changes when we're using it. What will be that? Again, the SkyTrain monthly pass. Once you pay it in the beginning of the month, you don't have to pay it every day. But the only thing that now that you can do is to use the SkyTrain as much as you can. So you can reduce the cost per trip. Relevant range is the level of activity for which the variable cost and fixed cost behave as we explained. Means that in that level of activity, in that relevant range, fixed cost stays the same. And the variable cost increasing with the increase of the level of activity. Example will be, as long as you're buying one zone monthly pass for the SkyTrain, you're gonna pay that price. If you move to the next relevant range, which will be two zones, then the cost is gonna increase. How are we gonna find the cost behavior? The cost behavior, we're gonna find it to find the straight line, and within that straight line, where the line is straight, we're gonna cut it, and we're gonna try to figure out, find a formula so we can express the cost. So out of those, we're gonna find out that this is the relevant range for the fixed cost between 40 and 80. And then between 40 and 80, we're gonna cut this line for the variable cost, and we're gonna express it by formula. So between 40 and 80, we're gonna say the variable cost behave as a variable cost. More we're using it, more we have to pay. And the fixed cost stays the same. So that will be our relevant range of activity. Mixed cost. Mixed cost is very interesting cost. And that will be the cost, combination of the cost of the fixed cost and the variable cost. So the total cost always going to be equal to the fixed cost plus the variable component of the cost. Perfect example here will be your cell phone. Fixed cost will be the monthly fee that you have to pay, and the variable cost attached to your cell phone will be the cost that you have to pay over the limit that you have on the data usage. Let's say you're paying $50 for 1 gigabyte plan. And every time when you increase the usage over 1 gigabyte, as long as you're using the cell phone for 1 gigabyte, you're paying $50. But when your usage exceeds 1 gigabyte, then for every 250 megabytes that you're using over the 1 gigabyte, you have to pay, let's say, $1. So that will be the variable component of the cost. So you're gonna cost gonna increase as long as you're exceeding the 1 gigabyte limit. Product cost. Now, product cost can behave either as a fix, either as a variable, or as a mix. So what we have to do, we have to find out how the costs behave. So we're gonna check the cost and we're gonna see which one is the fixed cost in our product. That will be the rent, depreciation, supervisor salary. What will be the variable cost then? The variable cost will be direct material and direct labor. More product I'm producing, more material I have to buy. More product I'm producing, more my people have to work on the product. The supervisor salary, regardless how many product I'm producing, I still have to pay that person. Regardless how many products I'm producing, I still have to pay the rent. Mixed cost will be the factory utility cost. I have to pay the flat fee for the utility, but if my usage increase, then I'm going to have to pay more. That's the same slide repeating here. So let's move to the next one, high and low method. The whole point is for us to predict the cost. How are we going to predict the cost? By classify them only and only into the fixed and variable. One of the approaches to calculate the cost is the high and low method. Now the high and low method, for the high and low method, I'm going to post you a separate recording with the Excel spreadsheet explanation. So you're going to have access to that one, and you can watch the recording and you can watch the explanation. But briefly, is what we're going to do is we're going to use the total cost into the high and low level of activity. We're going to then get the differences between the high level and the low level. And that will represent our variable cost. Once we do that, once we calculate the variable cost per unit, we're going to use on the formula where the total cost is equal to the fixed cost and the variable cost. But the variable cost is always cost per unit, time level of activity. Then we're going to determine the fixed cost component by expressing the formula. Let's see a simple example here. First, we're going to determine the variable cost. Again, we're going to get the high level of activity with the cost associated. We're going to get the low level of activity with the cost associated. Cost become our numerator. Activity become our denominator. Cost divided by the activity is going to give us the variable cost per unit. Example here will be, we have this 4 months data. We have January, February, March, and April. We're going to identify the activity, higher level of activity of kilometer driven and the low level of activity. As you can see, in January, we have the low level, 40,000 kilometers driven. And in April, we have the highest level, 100,000 kilometers driven. On the high level, we're going to get the total cost 63. And the low level, we're going to get the total cost 30. We're going to get 63 minus 30, that's 33. And then we're going to get 100,000 minus 40, that's 60. So the 33,000 cost, the difference in the cost will be our numerator. The difference in the kilometers driven will be our denominator. Once we calculate that, we're going to get that our variable cost per unit for the high and low level of activity is 55 cents per kilometer. So for every kilometer that we drive the car, we have to pay 55 cents per kilometer. Once we have that, then we're going to try to find the fixed cost. How are we going to find the fixed cost? We already know that the total cost is 63,000. The variable component is 100,000 kilometers times $55 at the highest level, or when the low level is 30,000 is our total cost, and the variable component is 40,000 times 55. The question is, how much is the fixed cost? So again, total cost will be the variable cost plus the fixed cost. Variable cost is the number of the units times the cost per unit. At the high level, that's 55. So the total fixed cost will be $8,000. On the low level, will be 40,000 times 55 or $22,000 or $8,000 fixed cost. So as you can see, regardless which method, which point we're using, high and low method, allow a high and low point, we're always going to get the total fixed cost. Once we get the total fixed cost, then we can express in the formula. And the formula will be now the total cost can be estimated by simply saying that the fixed cost is $8,000. Variable cost is 55 cents per kilometer. So as long as you tell me how many kilometers you're planning to drive the car, I can tell you how much will be your maintenance cost. Let's see here the example. Now, example is if the level of activity is go to 45,000 kilometers, how are we going to calculate the cost? Cost will be the $8,000 fixed cost plus 55 cents per kilometers. And since we know that with the kilometers 45,000, we're going to get the component of the variable cost. Once we get the variable cost plus the fixed cost, it's going to give us a total cost, which is $32,750. So let's try this question. Which one variable costs are which one are the variable cost?
A.
Variable in total directly proportionate vary
Okay.
with the
A.
changes. That's true. Yes. How about the next one? Remain the same per unit.
Yeah.
That's true too. Either. C,
A.
neither of the above. That's not. And D
C.
will be A and B. So which one is the most correct answer?
D.
D.
That will be A and B, right? So D will be the correct answer. Let's try this high and low method. Of the following cost and activity information have been provided. Based on the information, what would be the total cost if the activity level was $4,250? That will be our question now. So in order to solve this question, let me copy this question. And let me use the Excel spreadsheet. I'm gonna open the Excel spreadsheet and I'm gonna transfer everything there. Just give me a second. Okay, I'm ready with the information and now I can share my screen. And let's do this new sharing. Can you guys see my screen?
Yes.
Yes, Professor.
So what we're chasing here? We're chasing the high level and we're chasing the low level, right? That's what we need to find out. Which one is the high, which one is the low. Let me make it bigger so we can see it. Even bigger, better. Like this. So we're chasing on the high and low. Actually, I can flip it here.
Relational.
On the high and low,
18
first I'm
Purana.
chasing the activity. And then chasing the cost, correct? I need to find those two. In the activity, which one is the highest one? 5,000, right?
Yes.
And on the activity level, which one is the lowest? 3,000. So the highest one, let's mark it as yellow. That's the highest one. And the lowest one is the 3,000, which highlighted in orange. That's our low. Let's format those cells. And this one will be our yellow, and this one will be our orange. So the cost of the high level is that much, correct?
Yes.
That's our cost in that level. And the cost in the low level is that much. So we have everything. Now what we have to find? We have to find the difference. And the difference will be equal to 5 minus 3,000. Here. And here will be same formula. This one minus that one. So what we have? I have the cost on one side and I have level of activity. Now I can express the variable cost component. What will be that? The variable cost will be equal to, let me formatting this first. Variable cost will be equal to the, in this case, the cost divided by the activity. And since I know how much my cost is, right, I can express the variable cost. The variable cost will be cost divided by the activity. I'm gonna get the $25. Make sense?
Yes, Professor.
Now the $25 is my variable cost. So what else I know? I already know that my total cost, it is equal to the fixed cost plus the variable cost, correct?
Yes.
But the variable cost is equal to the variable cost per unit time number of the units. Correct?
Yes, Professor.
So in that case, the total cost is always going to be equal to the fixed cost plus the variable cost per unit
Unit.
time number of the units. That will be variable cost. That should be capital here like this. So I know so now which point I'm gonna use. I can use the high point or I can use the low point. Let's use first the high point and see what's gonna happen. If I use the high point, my total cost is equal to that number, correct? If I use the low point, my total cost is equal to that one, 169,500.
Yes,
So what do I have to do? I have to substitute in the formula, correct? So
Yes.
I'm gonna have
25.
219,500 to be equal to fixed cost, which I don't know, right? That's my question mark, plus in brackets, I'm gonna have variable costs per unit, that's $25, time number of the units that I have. How many units I have?
4,250.
On the high level, I have 5,000. What's gonna be the formula in the low level? The low level will be my total cost is 169,500, and that should be equal to the fixed cost, which again I don't know and try to find out, plus
25.
$25.00 time 3,000. So once I solve this formula, I should get the fixed cost component, correct? So the fixed cost in this case, let's go now 219,500 here, should be equal to the fixed cost plus what I'm gonna get in the brackets. If I get the 25 times 5,000, I should get 125,000, correct? Correct?
Yes.
Okay, once I get this, what I'm gonna get? My fixed cost is gonna be equal to 219,500 minus 125,000, or gonna be equal to 94,500. Correct?
Yes, Professor. 94,500.
So we get here at the high level, in the yellow, we're getting our fixed cost to be 94,500. Let's see what will be the cost in the low level. In the low level, we're gonna have 169,500. Should be the same, but let's double check on that one. Fixed cost plus in the brackets we're gonna have
25 times 3,000.
right here is gonna have 25 times 3,000. That will be 75,000 plus 75,000. So our fixed cost here will be equal to 169,500 minus 75,123, and that will be equal to, in this case, will be 169,500 minus 75,123. We're gonna get exactly the same result.
Okay.
Correct? So
Yes,
regardless which level we're gonna use, high and low, we're gonna get exactly the same result.
Okay.
Make sense? So do you have to do both calculations? No. You don't have to do the both calculations. But once we find the fixed cost, now I can express the formula. Now I can say the total cost, it's going to be equal to fixed cost, which is 94,500 plus
Zero.
$25 time number of the units. Correct?
Yes, Professor.
So what they're saying here, our level of activity is going to be now the number of the units in our formula or our calculation here. What they're asking us is they saying the number of the units
It's 4,002.
is equal to 45,000. How much will be our total cost? Can we calculate? Absolutely. It's going to be 94,500 plus
Plus
$25 time 45,000.
Yes.
It's 45, right? No,
No,
4,250. Where did you get 45,000? 4,250 units. Okay, so 4,250. Let's 4,250 units. Okay, so our total cost will be 94,500 plus, what's that component here? 25 times 4250.
No,
Yeah.
times.
No, time, not minus,
Yes,
right? Time. That will be 106.
106.
106, 250. And then my total cost will be equal to 94,500 plus 106, 250. Now the question is, do we have this as an answer? Let's check our solutions. On the slides, which answer will be that? Once we calculate our total cost is that much, let's move now to the slides. We don't need this Excel spreadsheet anymore. I'm gonna stop this sharing and let's move to the slides. Let me share the slides. And we have our answer. What will be our answer now? What did we get? We calculate the total cost is 2,750. So answer should be A. Make sense?
Yes, Professor.
That will be the correct answer here. So once you look at the slides later on by yourself, if you want, I can post it. I will post to the Excel spreadsheet as well. But if you want, here is the explanation how they get the answer. Can you see it?
Yes. Yes, Professor.
Okay. So manufacturing cost in the financial statements. Let's move on from that high and low. So the manufacturing cost on financial statements, those manufacturing entities prepare the same financial statements of the merchandising company. So they're going to have balance sheet and income statement. The interesting thing in the manufacturing company, they're going to have 3 different inventory accounts. And on the income statement, they're going to have only cost of goods sold. Which is the 3 different inventory accounts? In the manufacturing company, we're going to have the raw material inventory first. Then we're going to have work in process inventory. And then we're going to have merchandise, finished goods inventory, finished goods inventory. Where in the merchandising company, we're going to have only one inventory. That will be merchandising inventory. Speaking of which, let's go back a little bit. In Canada, in North America, and pretty much everywhere in the world, the three types of common businesses. One we're dealing only with the service. The other we're dealing only with merchandising company. And the last company will be manufacturing company. Now, the service company, they're going to only provide service. The amount of the inventory in those companies will be very small. The merchandising company, what they're doing is they're buying finished product and they're selling finished product. They're not involved in the manufacturing. They're just buying and selling. Because they're only buying and selling, they're going to have only one inventory account, which is related to their merchandise inventory. In manufacturing company now, we don't have the merchandise. We have to produce our merchandises, the one that we sell, which will be called finished goods. But before we have the finished goods, we have to buy the raw materials. Then we have to get somebody to work on it. And at some point, we're going to have something that is not a raw material, but it's not finished goods, somewhere in the middle. That will be called work in process. And once we complete the process of the work, we're going to call it finished goods. That's why merchandising company has only one inventory account, which is related to the goods that they're buying and selling. Manufacturing company is going to have three inventory accounts. One is for the raw material. Second one is for the goods which are neither raw material, neither finished goods, or somewhere in the process. That will be work in process. And once the process is complete, we're going to have the third inventory account, which is the finished goods inventory. On the balance sheet, how are we going to show the flow of the product cost? Product cost, we're going to move from one inventory account to another inventory account based on the company that we're dealing with. Once the item is sold, it's going to become cost of goods sold. So it's going to remain on the balance sheet as long as we have the product or inventory in hand. Once we sell it, it's not longer in the balance sheet. So the flow of the cost will be the raw material. From the raw material, we're going to get the material and we're going to put it in the working process. In working process, that material has to meet direct labor and manufacturing overhead. Once we have the three product costs, direct material, direct labor, and manufacturing overhead, we can say that the cost is complete. Product is ready, and we're going to move it to the finished goods. It's going to stay in our inventory as long as we have the finished goods. Once we sell it, it's going to go to the cost of goods sold. So for the balance sheet, again, the merchandising company, we're going to have only one inventory. Where in the manufacturing company, we're going to deal with the three inventory accounts: finished goods, work in process, and raw materials. On the income statement, we saw the balance sheet. Now let's see the income statement. In the income statement, we have to find the cost of goods sold. That's what we're chasing. Merchandising company, it will be easy. We're going to have our inventory. We're going to add the purchases that we purchased during the period. We're going to deduct the ending balance, and we're going to get the finished goods, cost of goods sold. On the manufacturing company, we're not going to work with the merchandise inventory account. We're going to work with the finished goods inventory. We're going to get the beginning balance. We're going to add the cost of all the products that we manufactured during the period. We're going to deduct the ending balance, and we're going to see how much we sold. Question for you. I have a question for you. Imagine this. You have in your pocket $5. You withdraw from the bank $200. You went for shopping. You went home and you found in your pocket $20. How many dollars did you spend?
$175.
How did you get it?
$5 plus.
Beginning balance was $5
Yes.
plus 200
Yes.
that you added
105.
minus
25.
20.
Okay, okay, it was 20. Okay. Okay, 205 minus 20. So that's 185.
How much is it?
I think it's
205 minus 20,
185.
185.
Yeah.
Let's do another exercise. You have in your pocket $10. You adding 200 again. You check in your pocket, you have $50. How many did you spend?
160.
160.
Yeah.
Is it clear for everybody? Because that's what you have to do here. You have to get the beginning balance of the inventory. You have to get the purchases. You have to see how much left and figure out how much you used or sold in this case. The other example will be you open your fridge and you have 1 liter milk. You went to the store, you get one big jug of 4 liters milk. You use what you use. You check the fridge at the end of the week and you found that you have 2 liters left. How many liters of milk have you used?
3.
Is it clear for everybody?
Yes, Professor.
Yes, Professor.
So that's what you have to do, guys. Make sense? That's how we're gonna get cost of goods sold. In our case, will be in the fridge, cost of goods that we use. Okay, so let's go with this one. So how we gonna get cost of goods sold? We're gonna get the inventory balance, beginning balance. We're gonna add the purchases, and we're gonna see how much we have available. Minus the ending balance, we're gonna see how much we sold. That's for merchandising company. For the manufacturing company, what we're gonna do is we're gonna get the beginning balance of the finished goods in January 1st. We're gonna add whatever we manufactured for the period, and we're gonna have how many we have available to sell. Once we're deducting the ending balance on December 31st, we're gonna see how much we sold. Make
Yes.
sense?
Yes, Professor.
Same thing with us. We had 1 liter milk. We added 4 liters. We have 5 liters available. Check the fridge. We have 2 liters left. 5 minus 2, we use 3 liters. We have $20 in our pocket. We added 200. Now we have 210. We went home. We found out that we have only $80. How many we spent? 130. So, work in process. Work in process is those are the units which are partially completed. Total manufacturing cost will be the calculation between the direct material direct labor, and the manufacturing overhead. Now, how are we going to get those cost of goods manufactured? Because here we're using this cost of goods manufactured. How are we going to get those one? We're going to see how much is our beginning inventory in the working process. We're going to add direct material, direct labor, manufacturing overhead, and we're going to get the total cost of the working process account. Once we're deducting the ending balance, we're going to get the cost of goods manufactured. Let's try this question, and you're going to tell me what you think. So here, sum of direct material, direct labor, and manufacturing overhead. See how it's called? Let's apply it here.
Okay.
So which one is it? Once we're adding direct material, direct labor, and manufacturing overhead, how are we going to code this one?
Total cost in work in progress.
Watch
Okay.
this. Total manufacturing cost. So what will be the correct answer?
C.
C. C is the correct answer. How about this? Which of the following is the correct calculation for the cost of goods sold? Cost of goods available for sale. Now, cost of goods available for sale is cost of goods available for sale. What's the right calculation? Beginning balance plus the purchases, or beginning balance plus cost of goods manufactured. Depends on which company we are, correct?
Mm-hmm.
So let's chase here and see where we are. Which one of the following calculation for the correct calculation for the cost of goods available for sale?
The second one, B.
The last one.
So let's watch at this. If we
Last
get the
one.
B, what we're gonna get? We're gonna get beginning working process, cost of goods manufactured, ending in the working process account. We're gonna get beginning plus cost of goods sold. We're not gonna get anything of this. That would be crazy. Honestly. Beginning but we chasing what we chasing? Cost of
Total
goods
cost
available
available.
for sale. On which account we're gonna get cost of goods available for sale? Are we gonna get it in work in process account or in the finished goods account?
Finished goods.
In the finished goods. So work in process is not our account. So we can
Mm.
eliminate this one. So we're chasing something in the finished goods. Is the total manufacturing cost part of the finished goods? It's not. Total manufacturing cost is part of the work in process account. So we don't care about this. A is eliminated. And in finished goods, plus cost of goods manufactured, minus beginning finished goods inventory,
No.
it's not going to give us anything because that's even the wrong calculation. It should be beginning goods plus the cost of goods manufactured. It's going to give us available minus ending balance, going to give us how much we sold. So with this calculation, we're not going to get anything. So the last one is the beginning finished goods inventory plus cost of goods manufactured. Now we're going to see how much we have available for sale. Make sense?
Yes, Professor.
Let's try this one. What was that? This one. A manufacturer balance sheet three inventories will be reported, may be reported. One, raw material, two, work in process, and three, finished goods.
Mhm.
In what sequence do those inventory generally appear on the balance sheet? Which one is first, which one is second, which one is the last?
That's
Raw
A.
material, work in
Raw
progress, finished
material
goods.
first,
A would be the
work in
correct answer.
progress,
D.
and finished goods.
What will be the correct one?
A.
A.
No.
Let's see.
It's D.
No, it's A.
D.
Can you see it?
Yes, Professor.
Why is this order? We're chasing liquidity, correct?
Okay.
Which one can be easily transferred into cash?
Finished goods.
Finished goods.
Finish with.
Finished goods, we can easily transfer to cash. Work in process has to become a finished good and then transfer in cash. So that will be less liquid. And the raw material is the one that is less liquid. Why? Because the raw material has to go to the working process. From the working process has to meet direct labor manufacturing overhead, and then become a finished goods, and then we can sell it.
Okay, Professor.
Make sense?
Yes,
So
Professor.
for that reason, first is gonna be always finished goods because easily can sell it, convert it to cash. Work in process, not so easy, and the raw material is the less easiest one.
Okay. Hello, Professor.
Sorry?
Okay, I have a question, sir.
Yes.
So anytime we are talking about the balance sheet, we should always have liquidity in mind.
Yes. In
Okay.
Canada, yes. In Canada, yes.
Okay. Okay.
Always because you see, we're starting with cash.
Yes, Professor.
Then we're going receivables, which is easily converted to cash, and then we're going to inventory.
Okay. Okay.
Make sense?
Yes, Professor.
Okay. So for that reason, the correct order will be 3, 2, 1. Let's do this. For the current period, can you see the question?
Yes, Professor.
For the current period, the prime cost were 195. Conversion cost is 140. The total product cost were 270. What were the direct labor, direct material, manufacturing overhead costs, respectively, for the period? Having in mind those formulas. So we know that 195 is direct material plus direct labor. 140 is direct labor plus manufacturing overhead. Direct material plus direct labor per manufacturing overhead is 270. How much is direct material? How much is direct labor? How much manufacturing overhead? Can you solve this? You have to express one after another. Solve it for direct labor, and after that, solve it for the direct material, then solve it for the manufacturing overhead, correct? Find out first what's direct labor, because direct labor is part of all the three formulas. Can you do it by yourself?
Professor, what is conversion cost over here?
Here, conversion, direct labor, manufacturing overhead. You guys got it?
Yes.
How much you get for the direct labor?
$65.
Direct material,
130.
manufacturing overhead.
75.
You guys know how to do it, right?
Professor,
Yes
can
or
you
no?
can you show us again?
So watch this. From here, right from here, what I can do. Right from here, I can say that prime cost, I already know it, is 195. That
was
should be
given.
equal to direct material plus direct labor.
Yes,
Now I can express direct material, correct?
yes, Professor.
Oh no, actually I'm going to express direct labor. No, sorry, direct material. Direct material will be equal to 195 minus direct labor. Here on this calculation, I already have conversion cost 140 to be equal to direct labor plus manufacturing overhead. Now I can express manufacturing overhead, correct? Manufacturing overhead is going to be equal to 140 minus direct labor, correct? Now, in this formula, now I can start expressing. I know my total cost. My total cost is 270, and that should be equal to direct material, which is 195 minus direct labor plus direct labor plus I already have 140 minus the direct labor. Open the brackets, solve the problem, find direct labor. Once you find direct labor, you have everything that you need. From direct labor, you can find here direct material, and from direct labor, you can find here manufacturer overhead. And we're done. Make sense? Are you guys with me?
Yes, Professor.
Yes, Professor. Yes.
Yes, Professor.
That's how we're getting this. That will be another way. Total cost minus prime cost gonna give you the overhead. Total cost minus the conversion cost gonna give you direct material. Prime cost minus direct material is gonna give you direct labor. That will be another way to do it. So there's different way to do it. Regression analysis. I'm not going to spend time on the regression analysis. It's very interesting. On the regression analysis, it's the high and low, but on the high and low, we already did the calculation, the high and low. We're getting the high level and the low level. We identify those one. We're getting the differences. We're going to come up with the calculation, and we're going to find out how much is our fixed cost. Once we get the fixed cost, we can express it in the formula and get it. Regression analysis, that's not going to be examinable. It's very interesting, but it's not going to be examinable again. And that's about it. That's about with these costs. Let me turn off the